back in because this RSI is overcooked. It's got to let off some steam. So let me show you what has happened throughout history. So this is the S&P 500 represented by the SPY ETF. So you can go back in time, any period in time, all right? I don't even know when, but just random time. And then you look at overbought or oversold on the RSI. So let's look at overbought, any period that's overbought. So I'm just looking, anything that is above the 70 RSI, that's going to be around, here. We could go, anytime. But I like it to be well above that line, the 70 RSI. So you can see, you go back almost any period in time on the S&P 500, and it goes from overbought to oversold. Sometimes it takes days. Usually it takes weeks or months. Sometimes it can take several months, and that's what I was fearing was going to happen, since October 8th, when I was just watching my short call go deeper and deeper into the money, and it seemed like it was just never going to change. But it always changes, and it always will change. It's never going to go linear up or down. And remember that. That was a really valuable lesson I had to learn the hard way this time. And fortunately, it was just 2 short calls in SPY and just 2 short calls in Apple. But a couple lessons. One is, when you want to give up the most, that's usually the worst time to, because you're right about to break through. And that's a metaphor for life, really, not just trading. They say it's darkest before dawn. It's things get the hardest before they get easier, and that's happened truly in my life. But with the trading here, with SPY, how could it only go up or only go down? Why would you get out right at the nadir, right at the peak, when you're, fighting the direction? Just wait. It's going to come back around. You will be right. But that's why so many people give up and get out of trading, because it's so nerve-wracking. Another thing I should have done, which is a lesson learned, was use defined risk. So by doing just undefined risk and selling naked calls and naked puts, single leg options, I was trying to avoid the deterioration of my profits by having a long call or a long put to cap the risk. But that's why I had to learn the hard way that iron condors, iron butterflies are always a better option than just the naked straddles, naked strangles. Yeah, you could make a little bit more, but it's not worth it if you lose unlimited amounts because you have undefined risk. So I have tier 3 options. Most people don't need them. Tier 2 is all you really need, because you shouldn't be trading undefined unless you want to get rid of your long stock, or you want to own the long stock, in which case you would sell a naked put if you want those shares put on you, or you would sell a naked call if you want to get rid of those shares at a set strike price that you'd be happy to liquidate your shares at. Otherwise, these losses that I've sustained over the last 5-6 weeks could have been largely avoided if I just either had defined risk by buying a call that's out of the money to cap that risk, or if I was selling short calls, which I had, rolling those, I could have been selling puts and continually selling puts every week or every month after they expire. That would have at least reduced my losses. So, you don't learn unless you learn the hard way. At least for me, that's the case. So, I'm going to go back to RSI, and then we'll be done. So, I hope this is interesting. You can see here that RSI goes from overbought wow, look how long this took to oversold. Right, that took a long time. So what I prefer to do to get faster indicators is I look for when stocks are overbought or oversold based on RSI. So like right here, and then I get out when the Williams goes oversold. So I get in when RSI is overbought. I get out when the Williams is oversold. vice versa. I get in when the RSI is oversold. I get out when the Williams is overbought. Because if you just wait for the RSI to go back oversold, so basically we would have had to wait from around February, let's say March 1st, until almost a year later. So it would have been March of 2017, in which we could get in. Let's say it really peaked overbought around here. Close price at 239.78, and then we'd have to wait until February of next year to get that oversold signal, and we're still at a loss because we got in here, we're getting out here. It dipped down around here, so close of 263-ish. And again, we got in around 238, so it's still like a $20 difference, but you'd have to wait almost a year. Versus instead, if you get in when the RSI is overbought here, and you get out when the Williams goes oversold. So you get in, here's an example, right? You get in, it's overbought, it's peaking anywhere around here. If you waited until this day, just by luck, this would be ideal, but, unrealistic, of course, to get in right when it was peaking. But any time around here where the RSI is overbought, so you're looking at a close price of around 235 to 240, let's say. All right, and then you hold it. You go bearish because it's overbought, so you're getting in around 235 to 240. You're short or you're bearish, and then you see that the Williams. So now we're looking at Williams goes down, and it plummeted here, went oversold, and we're getting out anywhere around 236, 233, or 234. So that would be a good trade. You could get in around 240, get out around 236. Now let me show you, that's SPY. Now, a lot of other stocks have a lot more volatility, especially with earnings and all that, but let's look at anything. Let's say Tesla. So 15-year chart. Obviously, Tesla hasn't been around that long, but just want to be able to go back anytime. And looking at the RSI, so let's look for a peak to trough. Let's look, here's one. All right, so RSI peaked June 18th, 2018. RSI was overbought. Tesla was trading around 360, and that was when we opened our position. And then we're done with the RSI. Okay, we open our bearish position because of how overbought Tesla is. So then we go to the Williams. Now, where does Williams go oversold? Here. So Williams goes oversold just a few weeks, like a week or so later, and that's when we get out. So we went from RSI peak to Williams trough, and if we got in around here, so 360, 370, that's close price around there. So let's say between, around 360 to 370. That's where, the RSI is overbought. And then we're looking to Williams. It goes oversold, and the RSI is at around the close price is around 333. So that's a real quick $30 to $40 per share just in a matter of days. So this is why I like Tesla. It trades really well with the RSI. So another example, anytime around here, it's peaking. And again, like I don't care where we are. This is why I wanted a 15-year chart. I just wanted to go back any time in history. All right, random there. Okay, RSI, overbought. So you're getting in around here. Then you look to Williams, get out there, and you're done. All right, another random period. Look for RSI overbought here. Well, RSI is overbought. You're getting in anytime around here. You're looking at around closing price of 275 to 285. So you're going bearish there, and then you're getting out when Williams goes oversold. All right, so that's around 260 closing price. So you're selling to open around 270 to 280, and then you're getting out a few days later at 260. So Tesla's great for that. Similarly, if you want to go the other direction, go oversold to overbought. So we just do that in reverse. Go anywhere in the charts. I don't care. There, right? And let's look for when RSI went below the 30. So it's oversold, 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 oversold. There's one. All right, it dipped below. We go bullish here because it's oversold, and now we look for the Williams to get out. So Williams went overbought a few days later, about a little over a week later, goes overbought around here. And if we, look to get in there, because that's when the RSI dipped, oversold, we got in here, close price of, oh man, this is way back in time. This is a close price of around $5.86. Went bullish, got out around here. A few weeks later, close price of around 30. Look at a profit you would have made on that. So again, the RSI is an oscillator. It goes from overbought to oversold, but you don't just rely on the RSI. You need the WilliamsR, in my opinion. I like to see other strategies that people use, but this is my favorite. And I look for an opening with the RSI when it goes overbought or oversold. That's when I open my position. If it's overbought, then I open a bearish position. So you could buy a put, or you could sell long shares, or you could sell a call. Any of those three options would work. And then you close that out when the Williams gives you that contrary signal. So if you went bearish because the RSI was overbought, it was peaking, the RSI was going above that 70 RSI line, then you close that position when the Williams does the opposite. So if you went bearish because the RSI was overbought, then you get out and you close out that bearish position when the Williams goes oversold. And in reverse, if you get in, you always get in with the RSI. If the Williams shows you the opposite signal, then you get out. So if you went bullish because the RSI was oversold, then you get out when the Williams goes overbought. So, a recent example that worked well in this is Boeing, BA. So, I could choose any time in their history, but earlier this year, it went really oversold. So right around here, let's see, October, but earlier this year when the scandal broke, I believe it was closer to January. Yeah. So now you would have done well on Boeing if you went bearish when the RSI was peaking anywhere around here and just waited. Even if it felt like, oh my God, I got in way too early. RSI is peaking 387. It goes up to 446. Holy cow! But if you just waited, it still would have made you money if you just kept rolling. That's why it's better to do the short calls. You can keep rolling those indefinitely as long as you can get a credit. Now, RSI it didn't even go bearish in March. It didn't go bearish until May. And that's when we have, an oversold signal on the RSI, May 13th. So if we got in there, and we got a close price of around 335, 340. Then we wait until the Williams goes overbought, and you already see the profit that you would have made. So that would have been a quick buck. Don't try to be greedy. I mean, yeah, this could have worked. You could have stayed in longer. You could have waited till RSI went overbought, but that never really happened. You'd still be holding those shares through all the ups and downs, whereas you could just get in and get out every time the RSI gives you that buy signal. So, you had another one here. RSI went bearish. Close price looks like it's around 3. Close price looks to be around 331, right? Get in bullish because it was oversold. Wait till Williams goes overbought. And that's at 351. And it's just been on a tear since then. It's up another $3.91 today. Okay, so I hope that helps. Thank you for watching.